Well, host nation Peru has benefited from China's demand for natural resources during the boom years, but with a slowdown in China and falling metal prices, where does Peru stand now? CCTV's Dan Collyns is joining us now live from Lima to find out. Dan?
Well, Jessica, certain issues, as you say, have dominated these talks. There's speculation and concern over if, when and by how much will the Federal Reserve raise interest rates, and that's having an impact on global market volatility, and of course the slowdown in China and how that's affecting emerging economies. And the IMF's Christine Lagarde said that the Chinese economy is in transition.
On the Chinese economic transformation, two things. One is the slowdown of growth is a phenomenon that was predictable, expected, anticipated, and we believe that it's a good move. You know, to only grow at 6.8 and next year at 6.3 with a growth model that is no longer based on either massive export relative to domestic, massive investment project as opposed to consumption, is a good transition. But it is a massive exercise. And there will be, you know, little bumps on the road because no transition can be made absolutely smooth without any disruption, without any volatility.
So a few bumps in the road, and not just for China. I had a look at how the global economic slowdown was affecting the host nation, Peru, and how it was getting used to the new normal. It was the biggest and most sustained period of economic growth in Peru's history. But it's over. Last year, Peru grew at less than half its decade-long approximate 6% average. Add in falling prices for minerals and a slowdown in China, and economists say there could be a deeper impact in 2016.
China's economy will keep slowing and it won't recover. The price of copper will keep falling, so the foreign capital investment will drop away and the interest rates will rise over the next few years. This is for the long term.
Amid the gloomy predictions, Peru's government has a plan. Peru is betting on China's sustained demand for its copper, however low the price may go. The Asian giant is the main market for Peru's mineral exports and the principal investor in future mining projects to guarantee a supply of the red metal for coming decades of urbanization. But a huge Chinese investment, the nearly $7.5 billion Las Bambas copper mine, has run into trouble. 4 protesters were killed in clashes with police last week as hundreds of locals demonstrated near the almost completed mine. Peru is the world's 3rd largest copper producer, but it has struggled to deal with conflicts with rural communities over mining. Violent confrontations have derailed multi-billion-dollar mining projects, fueling a slide in investment.
Our view is that the government needs to do more to promote dialogue, needs to try to address problems before they happen, to engage in a way that they get the consent of communities before projects move forward, and that more is done so that communities actually see some of the benefits from mining.
Starting next year, Peruvian banks will have to undertake social and environment risk assessments for corporate loans. The idea is to prevent such conflicts.
Reducing conflicts is a way to become more efficient and more effective. So it gives us better defense against whatever the markets might produce, China or others.
With minerals making up 60% of Peru's export earnings, it's sensitive to international shocks, but its problems may be closer to home.